Welcome to Investors Insights. Our topic today is final innings of 2021. With the World Series going on and all the excitement being created by the Atlanta Braves and Houston Astros, we thought it was only appropriate as we enter the month of November to go with the final innings of this market to give you insight about what we believe are going to be some major issues as we move forward over the next 60 days. Yes, that's right. In 60 days, we'll be in 2022. And there's a lot of things that we're keeping our eye on that could impact your portfolio. I'm going to ask you to stay with us throughout the vlog because of the information we're providing. And the other thing is follow us through the rest of the week on our social media, on Facebook, Twitter, LinkedIn, and our podcast, because we want to provide you as much information as we can. With that, I am honored this morning to have with me my distinguished colleagues, Trey Booth, Bobby Norman, Adam Van Zant, and Ty Miller. And they have done an incredible job. I thoroughly enjoyed the meeting this morning. And so we're going to talk about a wide range of things and how they could possibly come together to make this a very good 2021 year. With that, Trey, I'm going to ask you to start out because people are talking about interest rates. They're talking about the Fed. We talked last week about housing market, those kind of things. Everybody's watching the Fed closely. Give us some insight on the impact the Fed could have or the uneasiness some people have with it.
Absolutely, Greg. So this week, the FOMC is meeting and discussing what to do with interest rates and bond purchases. So since the beginning of the crisis, the Fed really has stepped in and supported this market, both the bond market and the stock market, with what's called quantitative easing by buying bonds on the market. The Federal Reserve is currently buying $120 billion worth of financial securities every single month. And so what's big about this meeting is the Federal Reserve has indicated that they're going to taper. And what tapering means is reduce the amount of bond buying. Fed likes to come up with words, seems to start with the letter T, tapering, transitory, but so the Federal Reserve is going to be reducing how much they're buying every month. The key is we don't really know how much they're going to reduce. Is it going to go from 120 to 110 to 100? And over what time period? So that's the important information that's going to come out this week is the Fed's going to discuss how they're going to reduce at what rate. They're not even talking about rising interest rates. All this is reducing the amount of stimulus they're putting into the market because they may feel that the economy is standing on its own 2 feet. Additionally, the Fed is going to be watching very closely at the end of the week the jobs number. That's been the most important number for the Federal Reserve. So those two data points really will have a huge impact on the stock market, on the bond market, where interest rates go. A lot of information is going to come out, and the Fed is going to, and a lot of news media is going to be talking about what the Fed said and digesting that and seeing how the market reacts. So when you hear the word tapering, that's why it's so important. It's really just reduction of bond buying, which the Fed may or may not do. But we're getting a lot of data this week.
Well, and Trey, let me ask you this question. We had discussion on this. Those that are bearish on the market, I think, thought that COVID would continue to be a major issue. COVID is still alive and well throughout the world. But I would say that the markets are focusing more and more on the economic news, the numbers, and what the Fed's doing, and discounting the impact of COVID on the economy. Would you agree with me on that?
Yeah, I would agree. I think the market's definitely, we've seen that the market's definitely more focused on kind of the interest rates, the impact of the economic growth, and whether or not the Federal Reserve is still stimulating from a crisis that the market, I feel like, is showing is in the rearview mirror.
Right. Okay. Well said. So, and with that, as we enter the month of November, the consumer, we start to focus on with the holiday season moving full steam ahead with these low interest rates, and also a term that we use around here called seasonality. So, Bobby, great job this morning. Talk about seasonality and also historically the month of November.
Yeah, after a big pullback in September and really volatile start to the month, the market was overall fairly strong to finish the month of October. And the great news for the market is that this time of year, and as you can see in this chart, late October has historically marked the seasonal low before stocks typically rally into year end. In fact, fourth quarter as a whole is by far the strongest quarter historically, and as always, no guarantees. But on average, the S&P 500 has risen 4% and finished higher nearly 80% of the time in the fourth quarter. Yeah. And again, no guarantees. But again, as shown in this chart, November is historically the strongest month of the year, both since 1950 and over the past decade. So whether you believe that stocks have kind of thus far followed the historical pattern of summer weakness that should be ending, or that the current price trend is so strong that it was able to buck the summer doldrums, we see ample reason to believe that seasonality has now turned from a headwind for equities to a tailwind. So seasonality is important today as concerns around choppy corporate earnings, fiscal policy uncertainties, and then what Trey said earlier about how the market reacts to any Fed actions. So a lot to like heading into the end of the year.
Well, and on that, with you referring to Trey over here, he's talked about the Fed and government there. From a standpoint, in just a minute, I'm going to bring Ty on to talk about some other government issues, but the consumer's playing a key role here now, and you've really emphasized that. And also one thing we've talked about in our vlogs throughout is that there's a lot of cash still looking where to go before year end because of these low interest rates and trying to get a return on their money. Mm-hmm. So we think some of that cash will be coming in. Now, with that, though, Ty, you brought up about some things, taxes, I believe was a word you used. You want to elaborate on that?
Yeah. So in the ever-changing world of tax and policy and in typical Washington fashion, they brought some somewhat last-minute ideas to the table last week with, a 15% minimum tax on corporate income.
Right.
And then, of course, I'm sure everyone's been watching the news and hearing the stuff about the unrealized capital gains tax. So with that being said, as of Thursday, Senator Manchin kind of shot down that unrealized capital gains tax policy. Now, for the record, if that was to pass, I don't want anyone to be alarmed if something happened. That's going to apply to individuals with over $1 billion in assets or $100 million in income. So for the most part, not too many people will be affected by it, mainly the super wealthy. But, if it got to that point, there'd be some extreme pushback from some very influential people.
No, you're right. And it would cause emotion in the markets. It just does that. It's just, news like that will have an impact.
Right. So Senator Manchin's idea is actually a 5% surtax on all income for wealthy individuals. And he's defining wealthy individuals as those with over 10 million in income. So more people affected, I guess perhaps a lower percentage, a higher percentage of people, a lower percentage of their income. So it's always give and take. But like I said, with that being said, there's always something going on in tax and policy. It's always changing. Even though tax revenues are at their highest percentage of GDP in the last 2 decades, they're still trying to make some changes. So just be on the lookout.
Yeah, and let me say this. It's also why we like to give those kind of details. I appreciate you explaining that. In this day and age where we all have our cell phones and get a headline and don't fully read all the articles sometimes, don't overreact to what you're getting. There's no reason to go into a panic. And also here at File Plan Partners, we manage all the money in relation to our clients' financial blueprints. And so we're coordinating things. So that's why we like to let them know what causes emotion. Adam, you're the guy that deals with emotion and keeps us updated as we see the volatility in the markets. We all have a lot of conversation on the technical analysis, which proved to be extremely valuable to us during 2020 and even 2021. So tell us our ranges here on the market, what you're seeing in resistance and support levels, strength in the market, which ties in to everything everybody else has talked about. So tell us about that.
Yeah, Greg, and I appreciate it. As we sat around as a portfolio team this morning, we discussed the volatility in the markets leading up from a broad standpoint. And, we saw a record close on the S&P 500 on Friday, coming in at 4,605. That pushes our new resistance level to 4,635 with a new support level of 4,575. The 100-day moving average for the S&P has now crossed over 4,400. So we're seeing that base start to rise. To be exact, it's sitting at 4,404. We're going to see if this momentum can continue through the rest of the year heading into 2022. But also, we want to make sure that some of these data points don't cause any turbulence along the way.
So folks, watch those ranges that Adam just talked about because we're keeping our eye on it. We're all this information we've provided as well. As you can tell, we see some positive things in the month of November. but we can always have something blindside us. We do everything we can each and every day to try and prevent that. So have a great week as you start the month of November. We will be here at Five Plan Partners each and every day, striving to see to it that we can help our clients live better, richer, fuller lives. Have a great week. Thanks.